Good morning, all. This is Marvin Gill. Today is Thursday, September 22nd, 2011, and we're going to go ahead and take a look at the S&P 500, see how the overall health of the market is. We're going to do this by looking at the spiders, and that's what you see in front of you. That's symbol SPY. Each one of these bars here representing a day, and as you can see, this is where we closed on Wednesday. And if you look here, we gapped down, meaning we traded overnight in Europe, and the market just traded down, down, down. We had disappointing job numbers today. The market did not like the numbers, and basically we gapped down. We gapped down in the open, and basically traded in this range here. This being the bottom, this being the top. Okay, and that's all we did. So we were down for the day. We were down a lot. Last time I came on here on YouTube, that was in August 29th. I explained that I saw a few trend lines forming. The two trend lines that I spoke about were these two right here. I drew them back then on August 29th, and I used the low here on August 9th and the low right here on August 23rd, and just drew it straight across, and I said that was going to provide some kind of support. It was starting to. I also drew this line here from the top of July 22nd, okay, to the top of August 25th, and that was kind of just forming this. It was forming this sideways pattern. The market really trying to find a way to have legs back, trying to build a base so it can form some kind of basing pattern and move up from there. I explained that again. The volume patterns were awful still, and I've been saying that from way back here before we had the mini crash here in late July. Okay, that brought us down a good 20 to 40%. I'm sorry, 20 to 30 actually. So you know, it's something that's been present. You can see it here as the market came down, volume came up, and I've reiterated this many times in videos before. You can see it on YouTube and on my previous videos. So you know, I explained that although we had these volume patterns, poor volume patterns, here we are going back up, here's volume going down, okay, and then we come down hard, volume coming hard. So you know, you typically want to see volume escalate or higher than average when the market is going up. That's this, of course, if you're bullish on the market, if you want, you know, stocks to go up. And then when the market goes down, like it does here, you want to see quiet volume, kind of like this. But look what happened. Volume came in higher. So volume again is gonna really show conviction in the marketplace. Okay, the more volume is, the big players are behind the move. So you know, when you see this and the volume is higher, it's just saying, you know, this is the big money crowd coming out of the market. So, you know, then we came back up, and I believe I did the cast on August 29th, right here was my last cast, okay? And on that day, I explained that, yeah, you know, although volume patterns were awful, I couldn't avoid the price advance. I couldn't just, you know, blind myself to this price advance here, breaking through this trend line, and I thought, you know what, maybe the market has a chance. So, you know, I decided to put in 25%, small position, okay, into stock, okay, and I'm talking asset allocation. I'm talking 401ks, IRAs, long-term type instruments, and you know, I said, let's go ahead and you know, dip our toes in, as they say, in the water and see what we find out. Okay, in this way, if we're right, we're in, and we can add on as the market would. If you're looking here, if the market would confirm itself, okay, and I also said while I was doing this confirmation that volume would come in higher, and it, you know, really didn't. You know, the volume was just, again, just below average but those 3 days, and then we came straight back down, and that little breakout basically failed for the moment. So it was basically a sit on hands type situation, keeping that 25% stake in stocks. Okay, so I'm still 25% in equities. Okay, keeping it small. And now it really is bothering me that this market has basically violated this trend line here. Okay, it violated it actually on the 21st of this is the 21st of September. Yesterday it closed below that level right there. Okay, so now and we gapped down this morning based on those we have bad news all over the place. Bank of America has been downgraded. Financials really have to start performing a little better than they have before we see any kind of gusto behind these market moves. I mean, if otherwise we're going to get these type of sideways moves. So basically right now that's what we've got. We've got a sideways move here. Okay, this is basically what we got. Okay, so I want to draw those trend lines right there, and we have this channel now. Well, let me get that out of the way. We have this channel going on now, okay? So, while we're in that channel, hopefully this thing will start to calm down, son. Calm down. Hopefully this will start to calm down. Calm, meaning, less volatility. Calm down. These are wild movements here. A lot of volatility in the marketplace. There are some stocks that are working. The market is awful, but there are some sectors that are working. Regardless, like I've told you before, 3 out of 4 stocks are going to move in the general direction of the market. So this is important to know the overall health of the marketplace, okay, of the stock market. And I use this SPY to kind of give me a gauge of exactly how the overall breadth is. So at this juncture, we have here the low that was put in on this day here. That was August 9th. This green bar right here. Okay, and there's the low, and I drew that trend line out. Now, we violated all the averages, right? We're trading underneath all of them, and that's not good. Okay, and now this is really the last line of defense. Okay, and we came pretty close to it today. Volume was high again, came in high. This is really bad action, guys. I mean, you should be having conversations with your financial advisors. Even if you have 401ks for the long term, I mean, market is timing. Don't let the overall wisdom tell you that it's not. Market is all about timing, and we've displayed that back here when we missed all of this right here and being in cash. Okay, and now ready to step back in as soon as this thing gets healthier. I think we're in for a long road. The best case scenario that I think this market can put up now is this thing just keep trading sideways in this channel, even if it takes us to the end of the year, and just base out and calm down volatility, just relax, and then build a nice base, and then we blast to higher ground from there. The worst thing I want to see is these wild wedging up type actions here. Boom, 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 and volume lower. When we crash, when we come back down, the volume picks up. Okay, same thing here, volume lower. Look at the pickup on the red lines. Look at this pickup, especially today. So the volatility has to really come down. This market has to relax. It needs to base out in a good fashion here and then move further up. I'm remaining with that 25% equity position. It's a small stake, in stock, so I'm not really bothered by this recent move down. I think I put in right around here when it broke out. I went back in 25%. But it's the thing that you don't want to do is ride this thing all the way down. Really pick a spot. Everybody's spot is different where it hurts the most. What I try to do here is, show you what I'm doing and how I go about, gauging how much stock I should own at this juncture, and doing this exercise helps me say, you know what, this is probably not the best time to be 100% in stocks. I wouldn't even be 50% in stocks right now. It is just the patterns. The technicals are awful on the market right now, so don't want to drag this on anymore. Again, I'm holding still that 25%, small 25% stake in the stock market. Actually invested in stocks. Everything else is cash. I have been from way back here somewhere. You got to look at the videos that I have here on YouTube. It shows you exactly how I called this whole market down without even predicting anything. So exactly the way I'm doing it right now. This is exactly the way I did it. So keep an eye out if I see anything of significance. Definitely a close below this line. If we open up tomorrow and we close on a closing basis, meaning you know, if the market opens and it thrashes this line during the day, right, goes up and down, whatever, on this line, and then it manages to come up above that trend line, that actually can be bullish. I would have to see the intraday pattern of the day to see if when it came down, it came down on light trade, it peaked below here, and then when it came back up and closed above it, okay, it did on a higher volume. That's usually a better sign, but still, we are a long ways away from this thing being a full out bull. It really isn't. It's awful. You don't need me to tell you that. I mean, let's just look at your statements, you know. So be careful if you do try to pick bottoms here. I would suggest going slow. Again, like I did back here at 25% position, and I said, you know what, as the market starts to prove itself, I'll add more on, and it didn't. It failed. I know what I needed to know. Now I know what's going on. Everything that I suspected here with the volume patterns is actually just coming to fruition, just like it did back here when I expected all, you know, way back here. Again, go look at the videos. You can see how I did that. So best of luck to you. You know, it's going to be a long road, guys. It's going to be a real long road, especially with an election year. Especially with an election year, it's going to be a toughie. So stay tuned. If you got questions, shoot them over. If you've got any stocks you want me to look at and see what I think, you know, please go ahead and message me. You can go to the website www.stockmarketplan.com. You can also visit us on Twitter on the Stock Market Plan, and also on Facebook, 3 words, Stock Market Plan. Okay, guys, have a great one. Good luck.